Okay, we're gonna come to indirect taxes today, and we'll be looking at sales tax and service tax. You can turn to your notes to sales tax. Now, most of the mechanism for sales tax and service tax are similar, so we don't have to repeat a lot of things. So I'll just let you know what are the same part, and I'll let you know what are the part that they're not the same. Okay. Now, first of all, sales tax is actually imposed by the Royal Malaysian Customs on two parties, manufacturers and importer. Okay, so if you are a factory, you manufacture products, then most likely when you sell your products, you have to impose sales tax. All right. Now, if you see the law, it basically says that sales tax are charged and levied on all the taxable goods when they are manufactured in Malaysia by a registered manufacturer, which is sold, used, or disposed by him. Notice, even when you don't sell the product, you might still have to impose sales tax. Okay, and it also says that sales tax will be imposed when you import goods into Malaysia. Now, so how do you know if you need to be registered? Because it says over here that you have to be a registered manufacturer. Now, basically, this is what the law tells us, that a manufacturer of taxable goods shall register the following time, whichever one is earlier. Now, we have two tests to decide your sales threshold. One is on the historical sales, the other one is your prospective sales. Okay, that historical sales is basically when you see that the sales that you've achieved in the past. Now, it says that at the end of any month, if the total sales of his taxable goods in the month and the 11th month immediately preceding that month has exceeded 500,000. So when the sales value of your taxable goods for that month and 11 month before that. Okay, so let's say, for example, now you're in July 2020. So your historical sales, right, will be the sales that you've achieved from 1st of August 2019 up to 31st July 2020. Okay, now that's the historical sales. Do you have 500,000, exceeded 500,000? Now, or if at the end of any month, where there are reasonable grounds for you to believe that the sales of all your taxable goods in that month and the 11 months immediately succeeding that, meaning we are talking about prospective sales. So if, let's say, in the month of July 2020, your prospective sales from 1st July 2020 to 30th June 2021. Okay, now you have to look at both the historical sales as well as the prospective sales, and whichever one that you look at it is earlier. Okay, now for example, okay, I'm going to go to a blank page. Okay, now for example, when you're now in the month of July 2020, now let's say your historical sales for the month of July 2020 is only 410,000. Okay, but if you reasonably believe the prospective sales for July 2020, that means we are talking about 1st July until 30th June next year, is going to be 515,000. Now notice, even though historical sales you have not hit the 500,000 threshold mark, the prospective sales you have hit the 500,000 threshold mark. So you will still need to register yourself, because the law use both historical sales, prospective sales, whichever earlier. Okay, so if you say you need to register yourself, then when must you do so? So basically, you have to register using a prescribed form not later than the last day of the month following that month. Meaning, if you look at July 2020, that means you must register by 31st August 2020. Because July is the month, that means the next month, by the end of the next month, you will have to register yourself. Okay, now I have an example here which is based on historical sales, that from 1st February 2019 to 31st January you've exceeded 500,000, so you must apply for registration by 28 February 2020. Okay, now there is this system called a voluntary registration. Okay, what is the voluntary registration? Voluntary registration is before your sales of taxable goods have reached the threshold, you want to be registered. So you want to ask to be registered. So that's called voluntary registration. Okay, now there's something called directive registration. Alright, and this only comes in when we have something called artificial separation of business. Now, if you read the law, right, it says that if the Director General is satisfied that if there's any separation of business activity which is artificial, he may make a direction requiring the person's name in the direction to be treated as a single taxable and then be registered from the date specified in the direction. Okay, why is that so? Now, for example, okay, let's say okay, I put a name, okay. Now, let's say Mr. Lee, he operates a factory. He's a sole prop, okay? He's a sole prop. He operates a factory. And then at the same time, Mr. Lee's brother also operates a factory and make a similar product beside Mr. Lee. Okay, so although they are two different individuals, own two businesses separately, but if you look at the operation, it looks as those that they are running it as the same business, in the sense like, now sometimes if you go to restaurants, you can see this is quite obvious. So two restaurant, two counter, but when you go in, you find that the restaurants are actually connected, so you can go left, go right. So there's a lot of all these nasi kandar kind of restaurants operate in this kind of manner. Now, so if the Director General of Custom finds that what you're doing is you are just trying to create two different entities, but when in fact you're actually operating the same business, now this is called artificial separation. What is the whole idea? So that you can split the revenue. And by splitting the revenue effectively, then you can avoid yourself being registered for sales tax purpose. Now, when this thing is detected, right, the Director General may serve a direction and then treat you as a single person and ask you to be registered. So they will combine this and say, now I will treat you as the same entity and please register yourself. So there are many factors that the customs will take into account to decide whether or not there's any artificial separations, like for example financial links, economic links, and so on. Okay, so if they see like you're using the same kind of machine, the same type of staff, the same financing, so all that is what they will take into account. Now, when you have been served with a directive registration, these are the consequences that you have to take into account. Now, the person that is named in the direction, this is direction, not director, the persons that will be registered under the direction, okay, so they will give you who will have to be registered. Now, then they will consider the taxable goods manufactured by one of the constituent member okay, will be treated as they are the taxable goods manufactured by one person. Meaning you can have two factory, but at the end of the day, they will treat everything as one. Okay. Now then they will treat each member to be jointly and severally liable for the sales tax due. That means Mr. Lee is liable, Mr. Lee's brother is also liable, and there will be penalty that if there's a failure by the single person to comply, is considered as a failure by each member. So that means if any one of them did not comply with the sales tax provision, the government is basically able to charge both Mr. Lee and Mr. Lee's brother. Okay. The next part here is about notification of change. So when there is any change to your registration, you should write in and inform the senior officers of sales tax about the changes and what kind of changes that you need to write in and inform them. Now, according to the law, things like change in your business name, change in address, changes in partners, or changes in the status of the business, if you have extra additional taxable goods, if you have opening new outlet, these are all example of changes that you need to inform them. Okay. Now a deregistration. So basically deregistrations means you will now be taken out from the sales tax registration, so you don't have to impose sales tax on things that you're selling in the future. Now you can deregister when you cease to manufacture taxable goods, or when the sale of the taxable good is now below the threshold. Okay. Now when this happen, right, you should inform the Director General in writing. Okay. And then the fact that the date of the cessation within 30 days from the date of cessation. But after you inform, right, it's up to the Director General, so he may cancel your registration. Alright, he may cancel. If he thinks that he wants to cancel, he can cancel. And of course, once he has canceled, then you are no longer registered under sales tax purpose. Okay. Now we do have exemption from registration. Okay. So you'll be exempted from registration, meaning whatever things that you make, you will not need to charge sales tax. Okay. So I've given you some example of products that could fall under exemption. Okay, that's a long list, but I'm just giving you some example. Like if your business involved with preparation of meal, repairing second-hand goods, printing photograph, tailoring, installing air cons in vehicles, these are all things that will be exempted. Okay. Now how do you measure and how do you compute sales tax? Okay, so this is what we're going to see. How do you compute sales tax? Now we will have to look at the two situations: the manufactured goods and also the imported goods, because the rules are actually not the same. Okay. Now, but the first principle is, the formula is rather straightforward. Sales tax is based on the sales value multiplied by the rate, which either is 5 or 10%. Now normally the exam questions will tell you the rate that they use. Okay, they will not expect you to remember what products uses 5% and 10%, but they'll tell it to you. Okay, so what is the sales value that we're gonna use for purpose of sales tax? Now the sales value, right, will depends on, like we say, manufactured or imported. Okay. Now, so I'm going to run through this part with you. Okay. Basically, for taxable goods sold by taxable person, we will take the transaction price. Okay. But this transaction price is usually the arm's length price. Now, what do you mean by arm's length price? Now, they say it will be the price, the market price, which would have been sold to a non-related party in an ordinary course of business. Okay, So what if you are selling to a related party? You have to apply the same arm's length price as well. Okay, now let's just take for example, there is a registered manufacturer. Okay, now selling product A at, let's say, 12 ringgit X factory price to customers. X factory price means selling price after you leave the factory. All right, now, and they sold 3,000 unit to a sub-C at 950, let's say. So how much will the sales tax be, assuming if you're going to use 10% as your sales tax rate? Now you're going to take, you're going to take 12 ringgit times 3,000 times 10%. Understand? So you have to use 12 ringgit and not 950 because this is a related party. All right. Now, and we see that for imported taxable goods, right, the value is actually based on the value determined by the custom plus whatever customs duty that you've paid or payable and whatever excise duty paid or payable. Okay, now I need some space. Okay, let's say I'm going to use here. All right, now you're going to import taxable goods. Now let's say the cost of the imported goods are 20,000. Okay, but the customs valuation is 24,000. All right, there will be an import duty, let's say 10%, and excise duty, let's say 5%. Now let's just say that this is what you're gonna get. Now how much will the sales tax be? Now you're gonna apply custom valuation, which is 24 and not your actual cost. Okay, I know the cost is 20, but for purpose of sales tax you have to use the customs valuation. Now the import duty is 2004 and the excise duty, which is 5%, is 1,002. So the value for sales tax purpose will be 27,600. Now let's say your sales tax rate is 10%, so you know what's your sales tax, right? Okay, that's how you determine the value for sales tax purpose if you import products. Okay, clear, imported goods. Now subcontractor, it's actually a person that do the manufacturing on behalf of another person. That's basically what we call subcontract. Okay, now how do you work out the sales tax for subcontractor? Now, so it's the amount that you charge for the work performed, but again you need the approval of the Director General of Custom. Okay, now we're gonna see the next thing. So now we understand that you have to be, let's say, a registered manufacturer. Okay, now when you sell your taxable goods, you need to impose sales tax. We know that, right? And I've told you how to calculate the sales tax. Okay, the next question now is the period. Okay, like when must I account for all these sales tax, and when do I take the sales tax and give it to the custom? Now you look at, for example, income tax. Income tax is based on a yearly basis. That's why we have an annual tax return. So you pay your income tax once a year, but then you have your tax installment, like company uses a monthly basis. Now what about sales tax? Okay, what about sales tax? Okay, now so first it says that sales tax are chargeable. The sales tax chargeable will be due at the time where taxable goods are sold, disposed otherwise than sale, or first used otherwise than as material in the manufacture, of the taxable goods by the taxable person. Now, what do you mean by use otherwise than as material in a manufacture? Now, I'll explain this later on. For example, if you have goods withdrawn, okay? Now, what do you mean by dispose other than sale? For example, goods that they are written off. So the sales tax will be chargeable at the time when the goods are sold, written off, or withdrawn. Okay. Okay. I just got a call, so I don't know where did I stop. So I hope you don't mind. Okay, so we said just now that for sales tax, we know that if you are a registered manufacturer, then if you sell taxable goods, you have to impose sales tax. And then I mentioned to you about the period. So when do I have to account for the sales tax? So the law tells us that sales tax will be chargeable at the time when the goods are sold and then disposed of otherwise than sale, which I've told you it includes, for example, if the goods are written off or if they are used other than for your manufacture. So like you withdrawn them for your own use. Okay. Now sales tax period, right, is based on 2 calendar months. Okay. Now, for example, if you're registered in the month of January, then your taxable period will be 1st of January to 28th of February. And of course, the next period is 1st of March to 30th of April. Now, but it doesn't mean that you must be registered in the month of January, right? So let's say if you're registered in the month of February, then you will be 1st of February to 31st March. And then the next period will be 1st of April to 31st May. Okay. Now, when must your sales tax return together with the sales tax be remitted to the customs officer, the office, okay, the Royal Malaysian Custom? Now, basically, it's not later than the last month following the end of the taxable period. Now, meaning if your taxable period is May to June, you know, every 2 months is one taxable period, right? So if the period ends in June, then the due date for submission and payment will be 31st July. Now, if your taxable period is October, right, ending in October, then the due date will be 30th of November 2019. Okay. Now, sales tax, you should account for it when it is sold, okay? And we account it on an accrual basis, meaning when the invoice has been issued. Now, once you issue the invoice, then we consider that the product is sold because you account for it, okay? You recognize that as a sales in your account. So then you have to account for the sales tax, even though the sales invoice has not been paid by customers. Understand? So it's on accrual basis. Okay. Now there's this part of the notes which I don't think is relevant to you anymore. You see, when the government introduced SST to replace back GST, right? Then there are all those existing GST registered person that they need to go into the SST system. And the government do not want all the companies or all the business operators to come in at the same time, and then they will use the same taxable period. So that's why at that time, right, there is this so-called like a transitional rule where they say that if you have an odd financial year end, then your first taxable period is from September to October. But if you have an even financial year end, your first taxable period will still be from September, but it will end in November. Okay, so you notice it's a bit different, right? Because this is actually a 3 months period, but that's only for the initial stage of the implementation of SST. So I don't think that's important for you anymore. Just forget it lah. Okay, it's not relevant. Okay. Okay, so what will happen if my sales tax is remitted late? Now, assuming you're supposed to remit your sales tax to the custom by 31st July 2019, right? So, and assuming your sales tax is supposed to be 100,000. Now, this is how the penalty for sales tax being computed. The first 30 days after you're late, you will then be imposed 10%. The next 30 days, you're going to get another 15%. And after that, right, it will be the final 15%. So it's much higher than income tax, right? So it's 10, 15, 15. That means the maximum penalty you're going to get is 40%. Okay? Now, that is the sales tax penalty. All right? Now, I mentioned to you about importation just now. How do you work out the sales tax when you import the goods? It's based on customs valuation plus whatever customs duty. Okay? Now, but questions is for manufacturer, when I sell the goods, then I'll account for sales tax. So what about importer? Now, importer, you don't have that kind of luxury because the goods are being brought into the country. That's why the sales tax will be charged at the time of declaration, and you have to pay all the sales tax before you can clear them out from custom. Meaning, the day you want to take the goods out from custom, then you have to settle all the sales tax. All right? Okay, what are the documentations and record keeping that you need to know? Okay, first they say, as a registered manufacturer, you need to issue invoice, and the invoice will need to have some of these particulars, and it must be either in Malay or English. You must have invoice number, date, the name, address, and the ID number of the registered manufacturer, the name, address of the buyer, descriptions of the goods, the total amount payable excluding sales tax, the rate, the sales tax, and the total amount with the sales tax. Now, they allow you to use electronic invoice, okay, as long as the invoice are being recorded in the computer, and they must be delivered to the buyer as well. Okay, now how long must you keep records? Just like income tax, they need you to keep all the records for a period of 7 years from the latest date to which the records relates, and you have to keep them in Malaysia. Okay, what happened to debit and credit notes? Okay, now basically you issue credit notes if you want to reduce the sales. Okay, you issue credit notes when you want to reduce the sales. Now, example, why would you have credit notes? Let's say there are goods returned, or you have charged a higher price. All right, you grant discount. Now, this will be credit note. Okay, on the other hand, debit notes are issued when you want to increase back the amount of the sales. The person got to end up paying you more. So I give you some reasons why credit notes are issued and debit notes are issued. So I say you issue credit notes. For example, there's goods returned because of poor quality, wrong quantity, goods that they have not ordered. Well, debit notes could be, for example, there's a shortage in invoice, you charge a wrong price, you undercharge your customers. Okay, so when you account for sales tax, is on accrual basis. Okay, so because it's accrual basis, meaning that the sales tax would have been accounted for, and you need to pay for the sales tax, right? So let's say you have account and then the sales tax has been paid to the custom. So question now is, how do you deal with debit notes or credit notes? Because the effects of debit notes or credit notes will affect the amount of sales tax that you either need to pay or the sales tax that you can claim as the deduction. Now, so I have two examples here that I'm going to show you. Okay, now let's say you have a taxable period that is from 1st Jan to 28 February. 2019 is not a leap year, so just change this to 28. Now, 28th of February. Now, let's say during this period, right, the sales tax payable is 15,000. Okay, 15,000. Now, during the same period, you have issued credit note, and the sales tax deduction for this credit note comes to 3,000 ringgit. So what do? You only need to pay the balance 12,000 to Royal Malaysian Custom. Okay, so this is what we call as a sales tax deduction, is to offset your sales tax payable. Okay, now what will happen if, let's say, your sales tax deduction is more than the sales tax payable? So I give another example in the next one. I say, now let's say now the sales tax payable is 4,005, okay, and then your sales tax deduction for credit notes is actually 6,000. So if you take 4,005 compare with 6,000, actually, right, you have a balance. Now actually my calculation is wrong, it's not 2,005 but it's 1,005. Okay, so again, need you to change. So you do have a balance of 1,005 as a result of the deduction, right? Okay, now what do? You take these and you carry forward to the future. So the word is you carry forward this 1,005 to the future to reduce the sales tax that you need to pay in the future. Now this is very important. You will not get a refund. Okay, there's no refund. Understand? That's how credit notes or even debit notes work lah. Debit notes is just the opposite of credit notes. Now, and if you do issue a credit notes, just like sales invoice, you need to have a lot of information, right? So what kind of information that you need inside? Now, of course, the document will need to have a title. Then you need to have a serial number, a date, name, address, identification of the registered manufacturer, name, address of the buyer, and of course now you need to give reason for issuing the credit notes. Okay, now this is about credit notes. Now we have another situations where you can have refund. Now what is the difference between refund and credit note? Okay, now sales tax deduction is to offset your sales tax payable, and then if not enough, you carry forward. This is how it works, and this is meant for systems like credit notes. Okay, refund is the Royal Malaysian Customs will return cash to the registered manufacturer. So you expect the money, so return money lah, return money back to the registered manufacturer. And what kind of reason that they will give you a refund? Now they give a refund to you when there is a bad debt, okay, or you overpaid your sales tax. Now what about bad debt? Now bad debt is because we account for sales tax on accrual basis. So this is the issue. Okay, sorry, another call come in. This is a call from Maxis and giving me a smart TV for 1 ringgit a month. Do you believe that there's such a thing? Obviously there's some gimmicks behind. So again, see, I forgot where I stopped. I'm so sorry. Okay, now so let's say you have made you know, sales tax is accounted on accrual basis. All right, accrual basis. So imagine you have made a sales where the sales tax 5,000 has been paid. Okay, so you have made a 50,000 sales, and then 10%, and then your sales tax has been paid, for example. Okay, now so that means you expect to collect back 55,000, right? You expect to collect back 55,000 from your customers, because 50 plus 5. Okay, now what if your customer did not pay? Now if your customers didn't pay you, now you're not just losing the 50,000, you're also losing the 5,000 that you have paid to the customs. So that's why customs will give you a refund. Okay, but of course, what if your customers pay you partial? Okay, instead of saying totally didn't pay, what if your customers only paid 20,000? So are you going to tell customs the 20,000 is only for the 50 and the 5,000 you totally never get anything and get the customs to give you back all the 5,000? Now, of course, you know the government will say no such thing, right? So the government needs you to do an apportionment to work out how much is the refund. Now, this is what we're going to do, the formula, okay? Now, for bad debt, right, okay, you can claim a refund when the amount is written off as bad debt, and you must satisfy DG that you have made reasonable efforts to recover the sales tax, but you fail, okay? Now, you can claim this within 6 years from the date sales tax has been paid, okay? Now, and the bad debt refund, it's actually determined using this formula. Now, basically, it's very straightforward. They say take the sales tax paid minus AB times C. A, it's the amount that you've received. B is the total, include the sales tax, and C is the sales tax. All right. Now, question is, if you have claimed a refund and then customers later pay you back, then you must also return back the relevant sales tax to the Royal Malaysian Custom, and the formula is the same. Take the ABC, that's the amount that you have to return back. Okay, so back to this. What if your customers only pay you 20,000? So how much is your refund? Now, your sales tax is 5K, right? And then you're going to minus the AB times C. Okay, what is the AB times C? Now, A is the amount that you've received. B is the total amount, include the sales tax, which is 55. And C is the sales tax. So the refund is going to be, let me just calculate, 20, 55 times 5. Now, the refund should be 3,181, or just round it, 82. Okay, now that's how we calculate the refund. Just use the formula will do. Okay, now look at the next one for an illustration. Okay, I would like you to try this on your own. So maybe you can pause this for a short while, and then after that you can check your answer. Okay, Brown is a registered manufacturer. It has invoiced XYZ for a taxable goods for an amount of 770,000. The sales tax rate is 10%. Now, meaning the value of the goods must be 700, right? And the value of the sales tax must be 70. That's why after 10% it becomes 770,000. Okay, but Brown has only received 385,000 and tried various ways to recover the remaining debt but failed. So Brown writes off the debt as bad debt. So how much can the sales tax refund be? Now use the formula. The sales tax is 70,000. Then minus ABC, right? A is the amount that you've received over the total amount, include the sales tax, multiplied by the sales tax. So how much will the refund be? Right, so if you take 385,770, now you get back 35,000. That means actually you look at it, you've got half of the money, so that's why you get back the other half that you cannot get. Now they say assuming after the bad debt is written off, then XYZ subsequently make another 154,000 to Brown. So when you get back the money, you have to pay back customs, you see. So question is, how much do you pay back? Now you use back the same ABC formula. 154 is the amount you receive, 770 is the total, and 70,000 is the sales tax. So 154. Now that means you have to return 14,000 back to the government. Okay. Okay, what kind of exemption you have for sales tax? Okay, So we're not going to go through the whole thing here, but it's just to roughly let you know that there are exemptions. So this is the things that exemptions are in. There are many categories. Okay, first we have these goods or the class of goods which are listed in Schedule A, that they are exempted from sales tax, so they're not going to have sales tax. Now then we also have Schedule A, B and C. Now Schedule A lists the persons that are being exempted. So if you fall in these categories, again, you're not going to have sales tax, like federal government, or if you are local authorities, your duty-free shops, okay? Now, Schedule B, these are actually for manufacturer, but they are the one that produce specific exempted goods. And because they are producing specific exempted goods, they can acquire all their raw materials, components without sales tax, okay? Now, Schedule C is actually an exemption of sales tax to registered manufacturer when they acquire raw material. Now, the whole idea why we have Schedule C is, again, for purpose of the operation of single stage sales tax. Can I explain to you later on what is that? Okay, now we also have this thing called the Approved Major Exporter Scheme. Okay, now basically under the Approved Major Exporter Scheme, if you're a qualified person, right, you will be exempted from the payment of sales tax, which may be charged or levied on the taxable goods that you import. So when you import the goods, normally you have to pay sales tax, right? Now, but not only imported goods, but also goods that's transported from designated area or special areas, or buy from a registered manufacturer. So when you buy something from a registered manufacturer, they are supposed to impose sales tax, but because you're under the Approved Major Exporter Scheme, you can buy them exempted from sales tax, meaning they will not charge you sales tax. It's something similar to this Schedule C or B that we say just now, but this is a bit more specific because this is meant for exporter. Now, so this is given when the taxable goods are meant for export. Okay, and all these taxable goods are used as raw material or as packaging materials or components that you're going to use them for manufacture, which again they say subsequently shall be exported. Now the reason why export they do not have this sales tax is because usually you understand that indirect taxes are meant as consumption tax, so they are charged when they are basically locally consumed. So to make the products more competitive when you export, right, the government wants to have basically allow you to sell at a better price, and one way is to take away this kind of taxes. Now that's what we call as the Approved Major Exporter Scheme. It's basically a scheme that your products are mainly for export, then you can buy goods or material without sales tax. That's the basic idea. Okay, what is this sales tax deduction? Now I want to explain to you the concept of single stage sales tax. Now the idea is this. Okay, let's say now for example, there's an importer. Now when you import, you will be imposed with sales tax. Okay, so when you sell your product to, let's say, a licensed manufacturer, now because you are licensed manufacturers, right, your goods also need to be imposed sales tax. And imagine then your products are sold to distributors, and then distributors will sell to retailers or whatever. Now the issue now is this: there is already a sales tax being imposed, when the importation takes place, and then now the licensed manufacturer will impose the same sales tax again. Now this is quite different from GST, where you have the operation of input tax, output tax, so you can claim credit. But here okay, I'm just going to use a simple number to give an example. Let's say the things that I import is 5,000. Let's say the sales tax is 500. Now, when this amount is charged to you, now I know you're going to have profit element, but I want you to see the same figure. So if I'm using the same 5,005, when the 5,005 come to you as a licensed manufacturer, right, then you will impose another 10%, because as a licensed manufacturer, you have to impose sales tax, you see. So the sales tax become like being compounded inside the figure. So the 500 now add another 550. So end up the same products that you sell, because of the multiple layer of sales tax that you've charged, the cost of the product becomes so expensive that at the end of the day, people will suffer. So what can I do to avoid that? Now, one of the example, right, is like, for example, okay, just now we say, like Schedule C exemption, or AMES, let's say, okay, Approved Major Exporter Scheme. Now, so the idea is when the products are sold to you, okay, this person will not impose the sales tax, or when you import yourself the product, you will not be imposed a sales tax. So the figure will come to you as 5,000. Okay, when the figure comes to you at 5,000, right, effectively, let's say when you sell again, you will only add 500 to the 5,000. So that will not increase the cost of the product, because of the multiple times of sales tax being added to the same thing. Okay, now, so how to achieve this? Now, one thing that I've told you just now is like this. This will be an exemption to the registered manufacturer when you buy whatever raw material, whatever things that you need for your manufacturing of taxable goods, right? You will be exempted. So like what I said just now, now if you are under the exemption, when you buy that time, the person will not pass the sales tax to you. They will not impose the sales tax to you. Okay, now so that's an example, one of them. Okay, but this scheme may not be available to all. So when you are in a situation that you cannot operate that kind of scheme, right, then there is another scheme available called sales tax deduction. Okay, now these are for registered manufacturer who have purchased raw material, component or packaging material that is already with sales tax being charged. So that means you paid sales tax already, you know. Okay, and now these things that you will use them in your manufacturing again, okay, you're going to edit them into the manufacturing. So they say a deduction of the sales tax paid if you can show that the products are used for your manufacturing of taxable goods. But the problem is you don't get the exact same amount. Okay, so the government's idea is at least better than nothing. Okay, now for example, if the sales tax rate is 5%, then you will get 2% of the total value. Okay, now if your sales tax rate is 10%, then you will get 4% of the total value. Okay, again, example. KG is a registered manufacturer, but does not have an exemption to buy raw materials with sales tax exemption. So they don't have exemption. Whatever they buy, there will be a sales tax. So it has purchased the following goods for manufacturing. So KG has paid 31,500 for a 5% sales tax inclusive, 60,500 for a 10% sales tax inclusive. So what is the amount of deduction you're going to get? Now, so the 31,500, you get 2%, which is 630. Okay, now then the 60,005, you get 4%. So you get 2420. Okay, so assuming for the same taxable period, KG sold 24,000 unit of his product at the price of 6 ringgit and another 6,000 of the same product to the subsidiary at a discounted price. So how much is the sales tax that's payable to Royal Malaysian Custom, taking into account the deduction? Now, you are supposed to take 24,000 times 6 plus 6,000 times what? 6 as well, because I've told you, right, the value for your selling price is at arm's length. So the amount would be 180. Sorry, I didn't give the sales tax rate. So let's assume your sales tax rate is 10%, okay? Then your sales tax payable is supposed to be 18,000, right? Okay, I got no space. Then the 18,000, you will reduce it with 3050. So you only need to pay 14,950. Okay, now this method is exactly the same mechanism as credit notes. Okay, so if you get credit notes, you get the same mechanism. All right. Okay, so that's the main thing that I've explained to you about how sales tax operate. So how do you register yourself? How do you compute sales tax? How do you determine the taxable period? What if you have a late payment? And what do you mean by exemption scheme, approved major exporter scheme, and even sales tax deduction scheme? Okay, all right. We have this thing called special area or designated area. What do you mean by special area or designated area? Now, designated areas are like Langkawi, Labuan, Tioman. Special areas are like free zone, license, warehouse, and so on. Okay, now the definition of Malaysia will exclude, see or not, will exclude designated area and special area. So if you have any goods that you import or you sell to all these area, they will not be imposed with sales tax, but not 100%. There are some exception where the sales tax will still be imposed. Now, I didn't have the full list, but I just want to give an example. Like if you sell marble or anchovies to Langkawi, you still have to impose sales tax. Okay, if you sell vehicles to Pulau Labuan, there will still be sales tax. Okay, now if you import something listed in Schedule A that will be used in this kind of licensed warehouse, for example, you buy forklift, you realize that the forklift will still have sales tax. Okay, now all these are example of what it means by special area, designated area, but they do have sales tax on certain exceptional items. Okay, now so I finish off the things that you need to know about sales tax, and I would like to carry on with service tax. Now a lot of things are the same, like I've told you just now. So those that they are the same, I will not need to explain to you, but things that they are not the same, I will highlight and need you to just pay attention to it. Okay, so who will need to impose service tax? Now, service tax will be charged on taxable service provided in Malaysia by registered person or any form of imported taxable service. Okay, now what do you mean by taxable service? Now, to be taxable, right, they must be prescribed and it will be listed in the first schedule of service tax regulation. So that's where the regulation will define for us what are the prescribed taxable person or prescribed taxable service. Whereas imported taxable service are those taxable service that we import or we acquired from outside. You're in Malaysia, but you take the service from outside. Okay, now I will need to run through with you the first schedule so that you understand who are taxable person and who are taxable, what kind of taxable service are there. So can we go to now, at the end of your notes at page 15, you will have this first schedule. Okay, I didn't bother to type the whole schedule, but I took it straight from the act, so that's why the format is like that lah. Okay, there are many groupings. As you see, there's group A, and then if you come down, you notice there's group B, and then there's group C, D, and so on. Okay, now basically they are grouping them according to category. So group A is for those people like hotel. They say if you're providing accommodation, so you become a taxable person if you operate accommodation. Okay, whether it's in a hotel or whether it's a lodging house or apartment or homestay, all right, you will be considered as a taxable person. Now when you read the schedule, be careful to see exception. So they have excluded accommodation provided by the government, authority, now, and any private higher educational institution. Now, because the law only say private higher educational institution, so technically if you are not under the higher educational institution, then you are not being excluded. For example, you're a private school and you offer primary school, not a higher education, and then you also provide accommodation service, you know, those kind of what do you call that, okay, a boarding school, okay, boarding. So you know, because of boarding school you provide a comms, right? Now because you are not a private higher education, then you actually fall within the category of taxable person. Okay, now then they say accommodation provided by religious or welfare body. So like for example, if the church has accommodation, then that will also be not classified as taxable person. Okay, now and how much value that you need to be registered? Now 500,000 is the threshold. You see, the threshold is not the same for different category, so that's why you have to really like memorize a bit. Now, and if you do provide accommodation, what kind of services that will be considered taxable? Now if you see, they define like accommodation excluding accommodation provided by an employer as a facility to his employee. So that means if you're an employee, you will not be regarded as taxable service. Now again, example, let's say you're a hotel operator, okay, and you are taxable. All right, now let's say in the hotel right, you also provided accommodation to your staff. Now this one you will not impose service tax, because the definition of taxable service exclude accommodation provided to your employee. All right, now basically taxable service will include all other services specified in other groups, then provisions of other services within accommodation, and even the sale of tobacco product, alcoholic and non-alcoholic drinks. So if you go to a hotel that is licensed for service tax, you go and buy cigarette, you realize that they will impose 6% on the cigarette. Okay, Okay, so the first group is hotel. Now number two, F&B. That means restaurant. Now, see, the value of taxable service is 1.5 million. So much higher. So if your restaurants, you don't have 1.5 million, you don't actually need to be registered for service tax purpose. Okay, now it says that any person operating restaurant, snack bar, canteen, okay, whether you eat in or tapao, now but they say exclude a canteen inside educational institution and a canteen operated by a religious institution. Okay, you must be in a canteen in the educational institution. Now you see, it's quite tricky. Okay, I get an example. Let's say we have college, all right, and Starbucks ran a lot inside the college, okay, and operate their cafe. Now this is not a canteen inside the college. They only ran a unit, a lot, and they operate Starbucks as their cafe. Now that one will still be taxable. You ask me, so if you say you want to be exempted, then what you do is you have to go to the canteen. You know, MCKL has our canteen, right? Then you know in the canteen they have counter, right? Now you go and take a counter, then that's right, then that will be exempted, okay, because the canteen must be located in the educational institution. All right, now so it's very clear that that has to be a canteen. Okay, now what are the taxable service? Now the food and drinks and the rest of other services. Now it goes on and says that provision of any other services other than service or rental of space. Okay, any other service other than rental of space within the establishment. So if you have somebody that is inside the canteen and they provide shoe cleaning, let's say a restaurant, okay, they provide shoe cleaning. So because the restaurant is registered, the shoe polishing service is any other service within the restaurant, right? It becomes taxable. Okay, now alcoholic and non-alcoholic drink, but very special, you notice they never mention tobacco for restaurant. Okay, third group is nightclub, dance hall, cabaret, health and wellness center, massage parlor, and public houses is pub, beer houses. Now all these are the not healthy stuff. Okay, so I don't know why it's not healthy, but then they mention health center, so I'm sure this health center is not healthy, right? Now they give you, these are all the person, okay, but they say if you are, now they say if you operate health or wellness center or massage parlor, but they exclude those facilities under the Private Healthcare Act. That means if you're under hospital. So if you have a health center in the hospital, okay, now then that's fine. All right, now or the other one is they say the facilities managed under the UNISTIS, then that will also be excluded, so you basically be exempted. Now the threshold is 500,000. Okay, D is private club. Private clubs is those clubhouse that you can go and enjoy all the facilities that those rich people usually will visit one, right? So private club. Now private club, basically nothing much, so 500,000 is the threshold. Okay, golf club on the other hand, together with golf driving range, is similar to private club. They also need to be registered, and they also have a threshold of 500,000. Okay, now gambling is also considered as a taxable service. So they say if you are licensed to provide bettings, lotteries, gaming machine, then you will be taxable. So when you become taxable, you have to charge service tax. Okay, now, okay, this is the more important one because there's a long list over here. Okay, there's a long list. Okay, so I will just highlight the keyword for you, but the value is just 500,000. Okay, this is for lawyer, all right? Lawyer providing legal services. Okay, now it can also be a Sharia lawyer. That means they are the lawyer for the Muslim law, the Islamic law, sorry. If you're an accountant, okay, you're an accountant. Now, if you are a surveyor, engineer, architect, okay, now any form of consultancy, training, and coaching. Okay, so if you call yourself consultant, now exclude, they say companies approved with the status for R&D. So that means if you're under R&D, you do not need to be licensed. Okay, now this one the advanced tax students will know because they do study R&D, contract R&D as part of your syllabus. Okay, now so that's that's being excluded. All right, now if you provide any form of IT service, any form of management service, all right, management service, okay, employment service, private agency, long list. Okay, now operates online platform or marketplace. Okay, these are the taxable person. Okay, and how do you know what kind of service are taxable? You just read yourself in column 2. I think it's very long, so I don't intend to go through with you, but I just leave it for you to run through. But that will give you an idea what kind of service that they offer lah. For example, they mentioned legal service, right? So you know lawyer match with legal service, and then just now they mentioned accountant, right? So when you read, right, they say bookkeeping, auditing, consultancy, these are called accountant. Okay, now, and you notice they mentioned about surveying services, valuation, appraisal. Okay, now engineering consultancy, architecture service. So they actually describe for you what kind of services, so you can know an idea what do you mean by a special category of taxable person. Like just now they mentioned online platform. What do you mean by online platform? You can see they say provision of digital services, including electronic medium that allows supplier to provide supplies to customers or transactions for provision of digital service. Now these are all example of considered as online platform. Like if you are gaotim.com, that you allow people to come to your place and host the service, this is what it means lah. Okay, next one is group H, which is credit card. Now credit card is a taxable service, but the rate of credit card is different. Okay, I'll come to that later. Now group I is the rest of the provider. Now they say that insurance is a taxable person, so if you provide insurance, you are taxable. But how do you know what service is taxable? They say all types of insurance. Okay, all types of insurance to an individual except medical or life insurance. So if you buy a personal accident, you realize that even though you're an individual, you will still have a 6%, because as long as you're not buying medical or life insurance. Okay, now B, they say all types of insurance to all business organization. So as long as you are a business entity, when you buy insurance, right, then you realize that your insurance will all be charged with service tax. So you see, if let's say your employer is buying a life insurance for its employees, now this one you will need to impose service tax because this is selling to a business organization. Now, but if let's say an individual is buying life insurance for himself, then you do not have service tax, because when you sell to an individual for life insurance, there's no service tax. But this is you're selling to a business organization, so that's the main difference. Okay, now besides insurance company, telco, like your DG, Maxis, that kind of company, Unify, you will be a taxable person. Okay, now if you are a forwarder, an agent here is actually a forwarder. That means those people that provide services to clear goods from custom. So if you buy or import anything, you need people to go to customs and get the things out for you. That's a forwarder. Okay, now parking operator is also a taxable person. Okay, parking operator. Now motor vehicle service center, workshop, is also a taxable person. Okay, now courier company is also a taxable person. Now the only thing that they will not impose service tax is when your parcel or your documents that you want to deliver. Now they say they only charge document or parcel not exceeding 30 kilo. So meaning if your document or your parcel exceeded 30 kilo, then they will not impose service tax. Understand, not? Okay, so it's only for document parcel not exceeding 30 kilo. And very clearly they mention that it must be within Malaysia. Alright, now so they exclude anything that involve outside. As long as there's an outside, it will be excluded. Now this is for car rental. If you do hiring of car, hire car, charter bus, all that is considered as taxable service. Okay, now this is actually advertising agency, so all types of advertising service. And the last one here is electric. That's why if you look at your TMB bill, TMB bill now has a 6%, but they say it's only to domestic consumer. Okay, exclude for the first 600 kilowatt hour. So that's why if you use your electric, the first 600 kilowatt has no 6%, and they are based on the minimum 28-day cycle. Minimum. That's why normally when your electric bill come, they will indicate how many day they bill you, whether it's 30 or 31. Okay, now next, this is basically air service. So what is air service? Air service is your air ticket. Alright, so provision of air passenger transport service. Now, so if you buy domestic aircraft ticket, you notice that there will be a 6%. Exclude, okay, they exclude if it's involved outside. As long as it's outside, then they will exclude it. Okay, now this is to do with anything that involve brokerage, like a remisier, bank, when they do brokerage for share trading, financial service where they will have brokering. Okay, cleaning service. Now cleaning service can be taxable. Exclude when the cleaning is in relation to goods, land or building for religious, education, residential or agriculture purpose. Now you see, like for example, if now they have this COVID and they want to do cleaning, disinfection, if they disinfect school, they will not impose 6% one. Okay, But if they disinfect factory, then you realize that 6% will be included. Now, then they will not include laundry that using coins or token. That means self-service laundry machine. Okay. Now, see, the list is very long because service tax is like that. They have to define what is taxable, what is not taxable. Now, I know you will have a questions like, do I need to remember all these things? The answer is yes, because if you do not remember, then how would you know what is taxable and what is not taxable? Okay. Now, so I want to run through a couple of things here, which is actually very important to you. Okay. Okay. It says that you only need one application for registration. Even if you provide 2 or more taxable service, one registration will do. Okay. Now, it says that where a company in a group of companies, they provide any taxable service in item A, B, C, D, E, F, G, H, I in group G, okay, to any company within the same group, they are not taxable. Okay, including if they are imported. Now, not everything, only A, B, C, D, E, F, G, H, I of group G only. Okay, now, how do you know that they are group? Okay, they say 2 or more companies will be considered as a group when they have control. So as long as one company can control over the other. Okay, now, but I want you to see carefully item 4. Okay, it says that where a company provides any taxable service in point 4 here, okay, they provide any taxable service to another person outside the group, okay, then the same taxable service will become taxable even though they are provided to the group. Now, unless the value of the taxable person to another person outside the group in that month and the 11 months immediately preceding that month does not exceed 5% of the value of the taxable service. Okay, I just want to explain to you what does it mean. Okay, it's very long, right? Okay, so first, can we go to group G and look at A, B, C, D, E, F, G, H, I. Now, if you go to group G here, group G, okay, professional. So A, B, C, D, E, F, G, H, I. These are the service. Okay. Now, J is not. K is not. L is not. See that? So not everything, you know. Okay. Now, M is not. Okay. Okay. Let me explain to you. Now, let's say A, Sendirian Berhad has 2 subsidy, B and C, Sendirian Berhad. Okay, so A, B, C are in a group. Okay, now B is accounting firm. Now, technically, you're a taxable service lah. I mean, providing accounting is actually taxable person, taxable service. Now, B only serve A and C, no other outside customers. Okay, so if you only serve A and C and you don't serve outside customer, then the accounting services are not taxable service, so you will not have service tax. Okay, you don't have to impose service tax. Okay, but let's say if B, case 2, also serve outsiders. Okay, now but then I'm telling you the sales of their taxable service, let's say, is 600,000, and the sales that they charge outsider is only 20,000. Now, so if you see 20 out of 600, this did not exceed the 5%, right? Now, if it never exceed 5%, that means the balance 580,000 is not taxable. So you will not impose service tax because you are still servicing your own group. Okay? Now, but if let's say I am changing this into 200. Now, so the sales of your taxable service is 600, but then the one you charge outside is 200. Now, obviously, 200 out of 600 is already 25%. That means everything will become taxable. So the entire 600 you have to impose service tax 6%. You understand? Now that is what it means by this. The meaning of group service. You will not be a taxable service if you're serving all these kind of services just now within a group, but provided you don't serve outsider. If you do serve outsider, you must not exceed 5% of the total value of your taxable service. So once you exceed, then you have to impose 6% for everything. Now, it's only in group G. Okay, if you're not in group G, right, then actually you still have to impose service tax. Okay, give you an example. Let's say C is a hotel operator, and then the employees of A is booking rooms with C. Okay, all right, employee from A is booking room with C. Now, will this consider as non-taxable? No, it will still be taxable service because accommodation is not included as part of the exemption for group. All right, so I hope that gives you a clarity about what is group service. Okay, now let's now go back to some of the basic concept. Okay, registration is the same. You have to look at historical sales, you have to look at prospective sales. Okay, now you can also do a voluntary registration, so I'm not going to explain, it's the same thing. Now, how do you compute service tax? Now, service tax is based on 6% except credit card, right? Just now I told you except credit card, where they charge 25 ringgit per credit card, both the principal card or the supplementary card. So if you hold 4 cards, the bank will charge you 100 ringgit a year. Okay, now the value for service tax is based on arm's length. Okay, so although there's a lot of description here, but it's based on arm's length. That's why they say that if the person are not connected, that means they are not related, you take the actual price. If the person is connected, you should take the price that you would have sold in the ordinary course as though they are not connected. Meaning we just take the arm's length price will do. Okay, now even when you offer the service for free, you still have to use arm's length price. Okay, now remember we say gambling is a taxable person. So if gambling, then the value of taxable service will be whatever prescribed by the government. Okay, now all that is the basic things about what is the value for service tax. Okay, how do you determine taxable period and the due date to remit service tax? Now, this is the slight difference. Sales tax is accrual, right? But service tax is on payment. That means it's on cash basis. So if the service is not paid, we don't actually account for service tax. Okay, so we follow payment. All right, we follow payment. Now, the concept of taxable period is the same. Every 2 months is a taxable period, and then once at the end of the taxable period, the end of the following month is the date that you have to remit the service tax as well. So we mentioned that service tax is on payment basis. So what if the customer didn't pay? Now, that's why there is a provisions that says if whole or part of the payment for the taxable service provided is not received within a period of 12 calendar months from the date of the invoice, not the date of the service, the date of the invoice, then the service tax will be due on the day following a period of the 12 calendar month, which means it's 1 year later. Now, again, example here. Safe Tax Services has provided taxation service to ABC, where the works were completed on 18 April 2019. The invoice issued on 25th of September 2019. The payment made by ABC on 11 November 19. The full value of the invoice is 3180. So when should the service tax be due, and what is the relevant period? Now, if we assume that your period is from January, February, because I didn't actually state this very clearly, okay? So if we assume that January, February as a period, now then we will have to use what date? 11 November 2019. Now, because the invoice is on the 25th of September, the payment is in November, so the service has been paid within a year. So we're going to use 11 November. That means you have to use 1st November to 31st December as the taxable period. So your service tax will be 180 ringgit, because 6% of 3,000. If you take 3,180 divide 1.06 times 0.06, you should get 180. So this service tax 180 you have to remit by 31st of January 2020. Okay. Now, look at the second example. Jojo Professionals has provided consultancy service to Mr. Ang. The works were completed on 15 March 2019. The invoice was issued on 8th of April, but the invoice inclusive of the service tax 5,003 remained unpaid even up to the end of 31st May 2020. So we will have to use 8th of April 2020 to account for the service tax, because if you have not paid 1 year after the date of the invoice, then we will have to use that 1 year later to account for service tax. So if your taxable period, assuming is from January, February, then it will be January, February, March and April. So it's 1st March to 30th April 2020. So the service tax in this case is 300, right? It will be remit by 31st May 2020. So look at the date, how we have determined the date. Now that's a slight different, okay? Now penalty is the same. It's 10%, 15, 15. Okay, so you just refer back to sales tax. Now the rule for invoice is the same. All right, so you just need to practice the same rule. You have to maintain 7 years and so on. Okay, now now there's something a bit different here about disbursement and reimbursement. So I need you to see what is disbursement and what is reimbursement. Right, disbursement is actually a recovery of costs or a payment made by the registered person on behalf of the other party. Now, disbursement does not constitute providing taxable service, so they are not subject to service tax. Okay, so these are whatever that the third party pay on your behalf. Okay, So they do not need to include service tax. So I always tell students disburse is D, don't include. Just use that to remember, don't include. Okay. Now whereas reimbursement, you have to include inside the invoice for service tax. Okay. Now so for example, let's say the service fee is 3,000, and then they put that disbursement is 250, and there are some reimbursements of expenses which is 400. So if you want to issue your invoice, this is what you do. So the service fee is 3, the reimbursement is 400, so the total will be 3,004. Then the service tax 6% on the 3,004, which is 204. Then only you include the disbursement, which is 250. So the total value of the invoice will be 3,854. So that's what you need to remember. So reimbursement will be included for 6%, but disbursement no. Okay. Now refund mechanism is the same for service tax, so we don't have to go through. We have gone through that. Okay, now there's this thing about exemptions that I need you to know. Okay, there is this taxable person in group 11. Okay, that we say that in group 11, in group G, all right, that they say except employment service or private agency, if they acquire the service from another group G, they will be exempted. All right, now what it means is like that. Okay, let's say this is an accounting firm. Okay, and this accounting firm is registered, and now there is a legal firm also registered. Now they are both in group G, right? Accounting firm and lawyer are both in group G. Okay, so when you are a taxable person in group G, you acquire taxable service of another group G, it will be exempted. Meaning, when the accounting firm bill the legal firm, let's say the service fee is 4,000 ringgit, the service tax will be 0 because it will be exempted. That's it. That is to again allow the operation of single stage service tax, so that when the legal firm bill their customer, they will just add on whatever 6% on all the services that they provide. So the accounting firm will not charge them. Just remember that. Okay. Now only for those person in group G. Okay, those person in group G, except employment service and private agency. The rest are all given exemption. Now, and the same exemption also apply for advertising company, which fall under group I. If they acquire another advertising service of another registered advertising company, it will be also exempted with the same principle. Okay. Alright, so these are the things that I've explained to you about sales tax and service tax. Okay, I'm going to go through some example from the past year, which may be helpful to enhance your understanding. Just hold on, let me load the past year question. Okay, you are looking at December 2019. We don't have a lot of past year because SST has just been reintroduced. Okay. Okay, the first one, they say Amalan has been manufacturing furniture for many years and is registered for sales tax purpose, and they charge 10% markup on the cost and the overheads, and they close account annually to 31st December. So the detail relating to a sale made to a customer, Kulims and Ramberhart, so they sell to Kulim. Now, they didn't tell you the amount they sell, but they mentioned that there is a 10% markup, and the markup is on the cost and the overhead, so you know what they charge. So the cost, the overhead, And then they mention to you that the goods are delivered, the date of the invoice, and the full payment being received. Okay, first, what is the selling price and the sales tax? Now, I think that's very straightforward, right? The selling price is obviously your cost lah. So the manufacturing cost is 60, and then your marketing overheads, this is part of your overhead, so that's 100, that's 40, so the total cost is 100. Okay, and then your profit markup is 10%, so 10,000, so the selling price is 110, no? And sorry, I got no space, so I do like that, so times 10%, so the sales tax is 11,000. Okay, can get that? Very simple, right? 3 marks. What's so difficult? Free. Okay, so the amount that you have to sell, so the total value of your sales invoice must be 121, because you must charge back the sales tax on your customer. So 121, so that is the total amount you sell. I think maybe we should just call this as the selling price. Okay, like, it's okay. All right, so the amount that you must charge is 121. Okay, what is the taxable period on the sale that you should record? So we say we account for sales tax when goods are sold. So in this case, the goods are sold when we invoiced it. All right, that's where you recognize the sales. So if you take 19 January, so we take every 2 months as a taxable period. Now if the question is silent, we always take the odd period. That means January to February is a period, March to April, then May to June. It's always like that, the assumption. So January 19 to 28 Feb 19. So we're gonna base on the date of the invoice. Okay, explain when Amalan should pay the sales tax for the taxable period. Now, if your taxable period is 28th of February, then you have to pay by 31st of March 2019. But the question say you must explain. So you cannot just give the date, right? So explanation is needed. So it will be by the end of the month following the end of the taxable period. Okay, so you can just say like that, at the end of the month following the end of the taxable period. All right, so the taxable period is 28th of February, so the end of 28th February, the end of the month following 28th February is 31st March 2019. Okay, now they give you another part. This time they say, what is the amount of service tax and the amount to be charged on the invoice issued to SOHO, and the taxable period which MORAC should account to Royal Malaysian Custom for the service tax on the invoice issued. So let's read this. MORAC Services Sendirian Berhad, an architect firm. It's a service tax registrant. And MSB closes account 31st December, and the detail for an invoice to SOHO, one of their customers. Okay, the fee for design is 10,000. Now see, disbursement 2,000, and then the date MSB issued the invoice is 22nd, and the date you settle is the 5th. Now I think this explains what we've covered just now, disbursement and reimbursement. So how much is the amount for your service tax? So I've told you, right? D means don't include. So you should put the fee, which is 10,000, and then the service tax. Sorry, no space. So the amount will be 10,006. Then the disbursement come in, which is 2,000. So the total value is 12,006. Now that's the 2 mark. Now when will the taxable period that you will account for the service tax? Service tax is based on what? Payment, not accrual. So the date of the invoice is January 19. The payment is March and is within 12 months. So you're going to use March as your taxable period. So that means it's 1st March to 30th April 19. Now, but again, questions say explain. So you must explain by saying what? You have to account. Service tax is accounted for when payment is made. I think that's good enough. It's only 2 marks, so I will not highlight about the 12 months issue. Okay. All right. So that's one example that we had in December 2019. Okay, so now I bring you to the questions in September 2020. Okay, so here now they gave you A1 and 2. Calculate AM's sales tax for the taxable period January to 28 February. Now, assuming that they are entitled to claim for the packaging material purchase under the sales tax deduction scheme. Now, I think you can recall, right? I've told you about sales tax deduction. This is part of what? Part of the single stage sales tax system. Okay. Now, it says over here that AM is a manufacturer and was recently registered for sales tax purpose. Now, they have bought packaging material used solely in the manufacture, 10,000 ringgit. And the sales tax for this material is 5%. Now, what do you do when you suffer 5%? You get back a deduction at 2%, right? Correct not? If it's 10%, 4. ASB also supplied goods worth 200,000 and received full payment in June 2019, and the sales tax is 5%. Now, the above transactions were carried out in January to 28 February. Now, they purposely want to confuse you with the date payment received. Now, sales tax is accounted for using accrual basis, correct not? So, when the goods are sold, you account for it. So, how much will the sales tax payable be? So, the goods sold are 200. The sales tax on goods sold 200, 5%, so will be 10,000, right? And the sales tax deduction will be 2% on the 10,000. So you get a credit of 200. That means your sales tax payable will be 9,008. Okay. Now then they ask you the next question. This is the same questions like what we see just now. When will the sales tax due to be remitted? Now, if your taxable period is 28th of February, then it's 31st March 2019. The reason is the same, right? It must be the end of the month following the end of the taxable period. Okay. Okay. Now they give you another scenario. They ask us to identify and explain the date that B&H was liable to be registered for service tax. Now, the registration for sales tax or service tax are the same. They use the same approach. The only difference is service tax, you may have a different threshold for different types of taxable service only. Okay. Then number 2, state with reason when B&H should have applied for registration. And what is the rate of service tax on the provision of credit card or charge card? Well, I think you know, right? It's 25 ringgit. Okay. Now, B&H commence provision of consultancy service, and closes account 31st December, and the annual sales for the first 5 months. So January to May. Now, identify and explain the date. Now, if you look at the amount that they have, 45, 120, 190, 190. Now, even up to April is already 545. May is 200. Now, what do you see as the date of their registration? So, if you're in January itself, if your prospectus prospective sales of the next, I mean January and the next 11 month is going to exceed 500,000, then actually January itself you have to register, you know, because there's no historical sales yet. You just started, so you only have prospective sales. So if that's the case, we can see that your prospective sales from 1st January to 31st December will exceed the threshold of 500,000. Now, how do you know it will exceed the threshold? Now, that's because the sales from January to April itself has already exceeded 500,000. Okay? Now, so in that case, January itself, you will be liable to register. Now, if January itself you are liable to register, then when must you apply for the registration? By end of February 2019, which is 28th of February 19. Okay, that's it. So the service tax rate for card is 25 ringgit per principal card, or 25 ringgit per supplementary card. Okay, now I just maybe show you to the answer and see what the examiner write, and then you can follow the style here, right? Okay, yep. Now sorry, I'm giving you the version that is before the finalization by UK. That's why there's some correction here. Okay, now BNH is liable to be registered for 31st January 2019, and a person that provides taxable service is liable to be registered. Now you see, examiner just copy the rule. This is the historical sales and this is the prospective sales. Okay, now so because of the future 11 month plus January, so that's why January itself you have to register. Okay, so if you just quote the law, you get the marks. And then they say you're required to apply not later than the last day of the following month, the month following the month you need to be registered. So your month is January, so 28th of February. Now then the rate of your credit card service tax is 25 ringgit per year on the principal and supplementary card. Okay, right, so that's it. So I have finished off all the things that I just want to do with you with sales and service tax. So it's a bit long lah because I covered two things together, but I've shown you the exam question. It's not so tough, right? Okay, it's kind of like straightforward, but at least you need to remember the stuff lah. Okay, all right, so thank you very much. I'm gonna end here. Thank you for your attention. Lovely, we have finished everything. All right, God bless you. Bye bye.